Thanks for staying with us. We begin with this. Moody's has downgraded Ghana's long-term issuer ratings to further junk status and change their outlook to stable. This concludes a review for downgrade that was initiated on September 30, 2022. Now, the ratings reflect Moody's expectation that private creditors will likely incur substantial losses in the restructuring of both local and foreign currency debts planned by government as part of its 2023 budget proposed to Parliament on the 24th of November. The statement pointed out that given Ghana's high government burden, debt burden, and the debt structure, it is likely there will be substantial losses on both categories of debt in order for the government to meaningfully improve debt sustainability. It further explained that the stable outlook balances Moody's assumption that the debt restructuring will happen in coordination with creditors and under the umbrella of a funding program with the IMF against the potential for a less orderly form of default that could result in higher losses for private sector creditors. Well, joining us to make sense of this latest downgrade by Moody's is economist and director of the Institute of Statistical, Social and Economic Research, Professor Peter Korte. Thanks for your time this afternoon, Prof. What does this mean for us?
Yes, good afternoon to listening viewers. If I could quickly take you through the global rating for Moody's global long-term rating scale, it rates from AAA to C. We are on the last but one, that is obligations rated CA are highly speculative and are likely in or very near default, with some prospect of recovery of principal and interest. So what it means is that because of the downgrade, because of the restructuring, there is some likelihood of default with some prospect of recovery of the principal and interest. So we're going to undergo a debt restructuring. And what it means is that investors or creditors are likely to lose part of their investment, but there is some prospect for recovery in the principal and interest. It's very clear the way the grade or the scale is very clear, and therefore looking at how we have been downgraded is very evident. I don't think they've been very transparent in the way they grade institutions, and it clearly tells you that there will be some recovery in terms of principal and interest. One good thing they say about our downgrade is that the outlook is stable. Stable in the sense that we are under a fund program. And under a fund program, what happens is it is more structured. The restructuring is much more structured rather than when we wait until we get to the point where we are unable to pay our debt and creditors lose part or their investment entirely. This is much more structured and therefore gives some hope for investors.
Well, you say it gives hope for investors. I know that government has been trying to manage the messaging and the concerns about debt restructuring. And so for Moody's to say, for instance, that the private creditors are likely to lose, what does this do in terms of the uncertainties that creates on the market?
Yes, I would have thought that by now, government would have come out clearly with its what they call debt treatment policy. We call it debt treatment, we say debt restructuring, the same thing. I would have thought by now they have been very swift and decisive in communicating what this entails. Unfortunately for us, we are being fed on speculations. You hear there's no haircut, then some also say there will be some haircut. And the finance market doesn't like noise. It does not like noise at all. It does not like opaqueness, lack of information. It will feed on speculation, and that is not good for us. We have investors, we have pension fund holders who have invested their lifetime funds, earnings, and would like to know what exactly, how much loss they're going to suffer. Because mind you, some have invested and they are living on their returns, their interest. And for them, it's very critical. Some depend on this to fund medication, hospital bills, etc. So it is very critical that this is communicated. I don't think they should take more than a week for us to come up with this debt treatment policy. It's taking too long in my view.
And do you think this downgrade will trigger some further downgrades from other rating agencies?
I think so. The other rating agencies would also react because this is a very major change that we are sending to the market. But you see, again, as I mentioned, the outlook looks stable because we are likely to get into a fund program. And I believe government has been working assiduously with the IMF to get this fund program on board. So once that comes, then the recovery would also kick in. So I would urge all investors, I would urge everybody to be calm. There shouldn't be any rush to disinvest or let's be calm and things will kick in nicely. Otherwise, it will not augur well for us. I believe with the fund program, we are likely to have some stability. We are likely to have progress as we proceed in the coming days.
Well, that was going to be my next question, ask you about the fund program, because the IMF team, we are told, will be in town from the 1st of December for the final lap of engagements with managers of the economy. What are your expectations of Ghana getting a staff deal before the end of the year? Is that likely?
I am quite positive. I think government so far have been engaging the IMF. I haven't heard of any disagreement so far. So we are likely to conclude on that. What I'm told is that if the board meets in November and also in March, if we're able to conclude nicely this time round, then perhaps the final approval will come in March when the board meets. So we're likely to get the fund program implemented in the first quarter of 23, sorry. But I think transparency should be the key. Government should be very transparent with the IMF team, and there should be dialogue. I mean, they should be open to dialogue, they should be open to concessions, it should be a give and take, and come to a consensus so that we can get this fund program going. But the fund program, I must add, that is not a long-term solution. We are likely to do other things at the back of the fund program to ensure that as a country, we don't go to the IMF for another term.
And we are getting indications that government is here to achieve all the prior actions required for the staff level agreement. Do you think that we should push for waivers?
Of course, you can ask, we should be able to ask for waivers if it's feasible, it's allowable. But if the IMF is not giving in or will not give in to that, I mean, we just have to accept that and continue with the program. Where we are, where we've reached, we've come far, and I don't think any stalemate will help our cause. We should just get them, and I believe the IMF is much willing to also assist the country, depending on how much we are able to accept some of the conditions. These are general conditions. They are not peculiar to Ghana. They are general conditions that apply to every country that approaches them. So let's accept them and make the most out of them.
And what would be the implications if we are not able to reach this staff level deal?
God forbid that should happen. If that happens, it will send further signal, bad signal to the market, and the consequences can be that it's going to affect our exchange rate, depreciation. It's going to affect confidence in our economy and many other things. Even the funds that are likely to come from the IMF and other bilateral partners will not come in, and that can severely affect our reserves and our macro targets can be thrown out of here. So I don't think we should go that route. I believe we have come far, and I'm sure it's the last lap that we should be able to cross.
Okay, my final question to you would be about the 2023 budget and if it sends the good signal that we want to cut down on waste and reduce expenditure. Do you think that falls in line with IMF's expectations?
Well, the IMF's expectations are in two ways: enhancing revenue, which we said we are introducing the VAT, increasing it by 2.5 percentage points, and also enhancing revenue through the e-levy handle, and also cutting down on expenditure. I've seen a lot of things about public sector cuts in terms of using V8 in terms of other cuts as well. But I think there is still room for improvement. I would have wanted to see a statement on reducing the size of government, government appointees and all that. That did not happen. But I believe government is listening, and I hope that they will also consider reducing the number of deputy ministers and other government appointees who currently are feeding on the expenditure side. And I believe that if we should cut some of this spending, it will send not just the amount itself, but also send a strong signal to the investor community that we mean business. Otherwise, it might not be the best for us.
Thank you so much for your time, Professor Peter Quartey. He's director of ISA, with some perspective on the Moody's downgrade, as well as the latest news we have on the IMF deal, that the team is in Ghana for the final lap of negotiations with the government. Hopefully something positive will come out of that. Well, let's talk about the 2023 budget. The Association of Ghana Industries, AGI, has described the introduction of new tax handles and increase of 2.5% on value-added tax, VAT, as a distortion to growth for the manufacturing sector. Finance Minister Ken Ofori-Atta is seeking Parliament's approval to increase VAT by 2.5% from next year. According to the AGI, its recommendations on the tax was for government to eliminate VAT from pre-production levels in order to help the sector thrive. President of the AGI, Dr. Humphrey Imdake, was speaking at a post-budget forum organized by accounting and auditing firm KPMG.
The VAT structure has the standard VAT, we have the flat rate, and then we have the levies built into it. We were of the opinion that if we could harmonize it and make it simple and very friendly to the taxpayer, for part of the tax ethics is that you make sure the tax is not complex, so that it lessens the evasion of the VAT. Over the period, evidence and data has demonstrated that there's been a large extent of evasion of VAT, and I gave an example of what the GRA conducted, and upon that basis, it formed the foundation to introduce the EVAT. So our prayer then was that if we could simply streamline the various stages in the VAT space, but this is not what we got. And I mean, to the extent that we were of the opinion that even if you do a 21% VAT as an input VAT and output VAT, it makes it easy for operationalization and compliance. But government also believes they needed revenue, and they put in a fixed levy of 6%. By virtue of that, as you increase the VAT by 2.5%, the total cascading effect goes beyond 21%. It's still a distortion of the productive sector. Besides that, we see other tax handles being introduced as we read them.
Well, meanwhile, head of advisory markets at KPMG, Andrew Akoto, has reiterated the call for government to have broader consultations with stakeholders to ensure successful implementation of the programs and policies in the budget. According to him, the only way for government to succeed with the new measures is to get the understanding of every stakeholder and seek their support. He spoke to Joy Business at a post-budget forum organized by his outfit.
The auditing and accounting firm believes that the introduction of some new tax handles and the increase in VAT has become necessary to support the government revenue mobilization drive. According to head of market and sales at KPMG, Andy Akoto, the targets in the budget are achievable but would require for both government and the private sector to work together.
We are advocating for a broad consultative process to make sure that the plans contained in the 2023 budget are roundly supported, because it's quite evident that it requires a multi-stakeholder approach. And without the support of corporates, the citizenry, and all economic actors, then government is going to struggle to get this budget through. As they themselves have dubbed it as an incubum budget, it seems to suggest that they are ready to take a unified approach. And therefore, it's very important that they reach out across the aisle to all other economic participants, no matter their leanings and their colors or wherever they sit.
Panelists at the forum, economist Dr. Prisla Chumesi Bafo, defended the inflation targeting regime by the Monetary Policy Committee of the Bank of Ghana. She disagrees with the call for the committee to halt its quest to control inflation through hiking the policy rate.
Recent times, I think about 5 months to date, the gap is widening a bit. So you see that the prime rate is lagging way behind the inflation. And that tells us that, yes, the inflation is not solely a monetary issue. It is not because there is too much money in the system. But the reality is that if the bank does not also control it, it could have gotten worse. Because when you track the data to see instances where price started rising and the policy lagged a bit, you see that the inflation rate rose faster than in months where they try to curtail it. And so for me, I believe that there is no reason why we should be bashing the targeting regime that we are on, but probably there should be some rigorous empirical work.
The panelists also touched on the need for governments to incorporate sustainability development goals into the economic policy.
And you're watching The Marketplace. Still to come, Christmas shopping looking very dry for traders at the Central Business District of Kumasi.
First, na keko Christmas time see no ke hayeshi and say na me skani eni ho ne ne ma na boy din say wo ba te say de afi na bronya kura twam foforo yeko a obi a ton ade a bera mo na akoyekuru so nka sa be say nke mu ache den a wo be fa ne ma kwa untimi du na.
Well, today is the last day of November, and the euphoria and general trade associated with approaching Christmas is missing at the business district of Central Business District of Kumasi, as traders predict a dry Yuletide this season. Despite large number of customers visiting shops, most traders complain of low sales. They say they are not expecting any significant improvement in sales during Christmas. Laura FM's Mona Lisa Frimpong gauges the mood and brings us this report.
We are at Adum, the heart of the Central Business District in Kumasi. And you know, it's a few weeks to Christmas. And usually around November, the last weeks of November, when you visit the Central Business District, you would find on the streets of this particular place colorful goodies all displayed here and consumers chipping in to buy. But today, I took a visit to this place and I find that the euphoria before Christmas is not usually here.
Adum, the epicenter of trading in Kumasi, is brimming with human activity. But the usual euphoria that greets patrons in the Central Business District ahead of Christmas this year is minimal.
First, na keko Christmas time see no ke hayeshi and say na me skani eni ho ne ne ma na boy din say wo ba te say de afi na bronya kura twam foforo yeko a obi a ton ade a bera mo na akoyekuru so nka sa be say nke mu ache den a wo be fa ne ma kwa untimi du nan so and say no enam say ska ho aye din nti no emu na nche sa
dabi hu hwe no dey say skani kroma ye din.
Well, speak of Christmas shopping, it is Cyber Week, and despite many retailers reporting lighter foot traffic, online sales across Cyber Week reached $281 billion globally, a 2% increase year on year. Whilst Europe and the UK results showed continued economic headwinds, US sales lifted global online sales growth throughout Cyber Week. And joining us, Marketplace Tech Pundit Henry Kobler, also lead for Eyes of Africa. And Henry, I know Cyber Week is not really a thing here in Ghana. I see a few companies try to introduce it, offering discounts and all. Did that create a buzz?
Yes, it did. I mean, quite a few companies are putting in that effort to, migrate from the normal traditional sales to doing either digital marketing sales or pushing it up onto their websites and all of that. I mean, just quite a number of them have tried a few of that. But I think that generally, because it's not a culture, you basically have a lot of them relatively extending the times, let's say Black Friday times, over 2 weeks, 3 weeks, just to get people to sort of be in the mood and also to try and do shopping online. But I think that it's sort of catching up, but generally it's not our culture here.
Well, we saw an increase in online sales, especially during the times of the COVID-19 pandemic. I'm just wondering how we've been able to sustain that over the period.
For me, generally, I think that it's actually a decline. Looking at most of the forecasts where you actually getting a lot of people to get online, have the culture of buying and selling online. And so generally, I was expecting quite a huge increase to hit people after the COVID pandemic, but I think that it's rather declined for me in terms of the numbers. I mean, 2% increment is really no percentage if you're looking at the numbers of projections. But I think that it would still pick up some time. Looking at the point where, I mean, most of the social media platforms are all migrating to e-commerce, I mean, concepts, they're actually giving up the platforms to be able to trade and to have trade potentially going on. And so with time, I think that it would take place in our market. I mean, generally for me, when I'm looking at sales, I think what happens, especially in Ghana, most happens on social media where, I mean, there's a bit of buying and selling. But again, there's been quite a number of other things happening, which I think that we've not had a very good tackle to that issue. And so there's resistance still in that sector.
So your advice, how can Ghanaian online stores remain competitive, especially during these times of an economic crisis? For instance, people would want to avoid delivery fees, and so they think that, oh, going to shop online is bringing extra cost.
I think that one of the ways to get around it is to start looking at smart logistics. How could we definitely be waiving off some of these shipping fees of products so that you can be sure that you can actually be doing quite a number of deliveries with using smart logistics to be able to get products to people without having to pay extra for delivery fees and for online charges fees as well. I think that that's one of the ways that people could definitely get in. Extended Black Friday times, extended shopping times also basically gives some level of encouragement. I think that still we would have to stick around with the cash in hand buying rather than using the Momo. Because again, it also attracts some level of fees where you still have some level of contact with the buyer, and so that could also come in handy. But again, looking at cash in hand, we could also deploy things as POSs directly, where people could use their debit cards to still make online transactions. I mean, but still at the doorsteps of them. And then again, I think the normal discounts, which comes in with some of the products, should be in place.
Henry Kobler, thank you so much for your time. As always, that's the marketplace. Thanks for watching. More news on our website, myjoyonline.com/business. Goodbye.